Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, today we're looking at the SPY, which is our proxy for the S&P 500. We're also going to be looking at the PCC and we're going to be looking at the VIX. But first, a quick life update. So, as you may have known, I've mentioned on the YouTube before I put out a post, and I also mentioned it in the previous video, my dad's been unwell recently. He had a stroke and then he's had to have major surgery to clear a carotid artery of a blockage. He's then been in the ICU, but the good news is he's finally home with mom and he's doing a lot better, and nobody comes away from an acute stroke unscathed, but I honestly feel he's come off pretty lightly. I've had to make the 650-mile round trip to North Wales and back a couple of times, and I've had to do that on the weekends where my missus has been available to look after the kids, which means I haven't been able to work. I haven't been able to produce any content. Now this is compounded by the fact that I'm now a full-time stay-at-home dad, again with my missus returning to work, and this simply means that I don't have the time for YouTube or for the Patreon or for my business as I would have if that was not the case. Now, I don't lament that. That's a change that we've embraced, we've agreed on, and I'm happy with it. So, regardless, or counter to what some emails have asked me, counter to what some comments have asked me, I'm not dead, number one. I haven't given up on the channel or abandoned it. I'm still here. I'm still going to pull out content when I can, just not as often. I'm not deeply confused by the market and therefore not posting, alright? I'm going to make content when I can. So, trust me when I say I will be back at it in a year or two once my little boy goes to nursery and I have more free time in the day. But I'm not one for childcare. I gave my daughter all of my time when it was her turn for me to be a stay-at-home dad. I would give my son all the same time as well, and each to their own. I'm not judging anybody, we're all different, but that's just the way we want to do things, so that's the way we're going to do it. And when the time comes, the channel will pick up again, I'll get more content out, but for the foreseeable future it's going to be a bit quieter here. I appreciate for those of you who stick with us, I appreciate all new subs we ever get, that's great. But no, the channel has not been abandoned. No, I'm not dead. No, I'm not being lazy. I've just reprioritized my life and I'm choosing family over work. Okay, so anyway, that's enough of that. Well, on that note, actually, I'm just going to say I'm going to keep the Patreon open for those who want to join and learn Elliott Wave and access all of educational content. I'm still doing the monthly dividend calendar and stock rating system for patrons, and I'm still doing weekly live streams when I can. Can't give you an exact date or time, but when I do, I'll let you know. And I'm going to continue to try and do that going forward. So, well, that's the best I can offer. Right, so now let's get to today's work. So, the SPY. We've been rallying since October last year. We've been bullish for a long time before that in terms of the long-term count. I continue to be so, and I'm bullish off of a low here, and I've had a primary count that's been bullish for a while. We've had an alternate bearish count because you never know for certain. Now, my patrons will be very familiar from all the live streams they've attended that whenever we have 5 off of a low and 3 back, Tom prefers to be bullish. What I say is, well, let's give it the benefit of the doubt, because this margin between that low and that low is the potential loss. Okay, here's your structural stop. You can tighten it up on a smaller time frame, of course, if you want to. You can do it on any time frame. You can make it this little pivot here if you want. But my point being, on a day time frame, that's the biggest structural stop you've got. Well, we are a lot closer to the lows here than we are the highs, so this is the greatest potential gain to be had, and this is the smallest amount of loss we can manage, or the smallest amount of risk that we can manage. The same is true from the highs. Once we get a high, we get the first swing low, swing high to a lower high, this becomes the stop, and this becomes the smallest margin of risk we can manage, and this becomes the greatest potential gain. This changes over time, obviously, because then this low then becomes this low, then becomes this low, and we can go stop loss, stop loss, stop loss, and we can move up with the trend. Right? We can also add to our position and expand our overall exposure over time once we've secured some profits. Why am I saying this? Because it doesn't matter whether you're right or whether you're wrong. Some people love to get the fucking measuring stick out and flop their big dick on it, or their little one on it, and say, oh, look how big mine is, I was right, look how small yours is, you were wrong. Anyone who's thinking like that is a fucking moron who doesn't understand a damn thing, and therefore they are more interested in getting patted on the back for being right than they are for making money, which to me makes absolutely no sense at all. I wouldn't forgive the average person who's not a trader, not an investor, not an Elliottian for missing out on this rally. Okay, it's been ambiguous, it's been tricky, but if we just practice that simple philosophy, in my opinion, of what I mentioned in the previous video a previous video a few weeks back about on Apple. I was talking about if we can just learn that 535 structure. If we can just learn that 535 structure right, we can trade these pivots way easier. If we can just learn to do that, right? Because it doesn't matter longer term whether you're right or wrong. What matters is that if you haven't participated, you've missed out on a 24% rally, which kind of sucks. Because even if you're a bear, that sucks, because what have you been doing for the last 6-7 months? Okay, been wasting time twiddling your thumbs. Now, if you are a bull, well done, you participated. If you are a bear, best case scenario, that happens next. Worst case scenario, that happens, and you continue to miss out on this thing. How much longer are you going to miss out on this? How much longer are you going to deprive yourself of these gains in the hope of being right? I don't know who I'm talking to exactly, but you know who I'm talking to. Okay, you know who you are. And because some of you have emailed me, some of you have been at me for months now, giving me a hard time, telling me that I'm abusing my position, whatever the fuck that means. I have a tiny little YouTube channel with 40,000 subs and I'm misleading people by being bullish, am I? Well, whatever. Sorry this is becoming a bit of a rant, but you know who you are, you know you're wrong. You know that you've missed out on 100+% rally in Meta. You know that you've missed out on new all-time highs in Nvidia. Alright? Because you're an idiot. Alright? And you're not alone. I've come across a lot of you. Alright? Sometimes it's obvious. When Nvidia sells off 50, 60, 70%, you don't fucking argue. You just fucking buy it. Alright? When Meta sells off 50, 60, 70%, you don't argue. You just fucking buy it. Okay? It's been a little tricky here, like I said, in the market, but the point still stands. Let's just get into the habit of looking for that. 5 up, 3 back gives us a massive probability that this is the next move. 5 down and 3 back gives us a massive probability that this is the next move. Can we just, if we could just do that, we take a lot of the stress out of the situation. We make things a lot easier for ourselves. Okay, so I don't know why it's so fashionable to be bearish. I really don't. I've been through multiple bear markets over the years in multiple asset classes, and for some strange reason every time this happens, and it's only gotten worse, I honestly feel it's a function of social media. Twitter is a cesspit in my opinion. You might say, well, you're a hypocrite, you've got a Twitter page. Yeah, how many people am I following? 0. And I'm not, I know I might sound arrogant, I'm sorry if you think I'm being arrogant, I'm honestly not. I couldn't give a flying fuck about Twitter, with who's posting and who isn't. I post because I want people to see my latest video and it's an easy way to find it. Okay, but I couldn't give a flying fuck what else everybody else is saying. YouTube's not much better. I love YouTube, but my god, fear sells, panic sells, bad news sells, and people love to sound clever, and nothing sounds more clever than predicting the crash. Nothing sounds more clever than calling bullshit on everything. Okay, calling for the end of the world. Well, unfortunately, guys, you're wrong, and you miss it, and you lose it, and you've lost money in the meantime. Now, if you turn out to be right, chances are you won't make money that way either, because you just don't seem, you seem to be allergic to it. But either way, enough said. My point is, ignore the noise. Learn to give a pivot off of the low to a swing low to a higher low. Give it the benefit of a chance. Give it the benefit of a doubt. The first 5 down and 3 back off of a high to a higher low to a lower high. Give it the benefit of a doubt. Okay, if you just do that, chances are you'll be rewarded. Chances are you'll be rewarded frequently. But anyway, I digress. Let's get back to the chart. So we've noticed that we've broken. Where have I moved my drawing tool to? I'll be fiddling around. Here it is. So we broke this downward trend. We first noticed this trend ages ago, obviously, and we noticed its break, and we mentioned it on the channel, and we mentioned this back test and how we were trapped between these two pivots, and we didn't know whether we had free wave move into a bearish structure or whether we were going to go lower, and we had 2 counts there which were roughly 50-50 probability at the time. I remember discussing it. Okay. Then we're going to swing to a new high, which is taking out the minor pivot of that high we were trapped below at 418.31 and the major pivot at 431.73. Right, now why is that a major pivot? Because the sequence of low, lower high, lower low, lower high, lower low, lower high is now broken with this move back above 431.73. We've now had a high. So we are now looking for the sequence of high, higher low, higher high, higher low, higher high, higher low, higher high, that to now be the established trend. Okay, and if these pivots were to break, we have the opposite. We have a sequence of higher highs and higher lows, and then we have a low. Right, so for the moment we're in an uptrend now. Sorry, I was just remembering a headline. We're in a bull market. It's like, well, you know, we've been in a bull market. Whether you call it a bear market rally, which you can still technically call a bull market, or whether we're in an actual bull to new highs, right? We've been in one since October, guys. Okay, we just didn't know it, did we? Because we don't have a fucking crystal ball, do we? You know, we don't have a crystal ball. So that's why we play. That's why we rather play the odds. Okay, so we don't have prescience, but we've broken that downward sequence. So what the bears have to be aware of now is that this, if you're a bear, you believe that this is a bear market rally, which means the next move is low. Well, if this is a bear market rally at 242 days in length, it's a fucking big one. In fact, I'd argue, I can't be certain, we can go and check it out for a couple of minutes if you like, actually. I'm pretty certain it's the longest ever. Okay, now you might say, well, that supports the idea that this is going to be the biggest correction ever. I say, well, that's a pretty big call. That's a pretty brave call. You're going against the odds at this point, aren't you? Is this the longest bear market ever? Are you actually as clever as you think you are? Or is it the reason it's 242 days in length is because it's actually a bullish phase of a series of higher highs and higher lows going higher? I'd rather back that. Now, if I'm wrong, I'm wrong, but we've already spoken about how we protect ourselves. Okay? I'm just saying, what am I saying in the simplest sense? I'm saying, please just learn to ignore the noise. With never-ending fear-mongering, the never-ending end-of-the-world mongering that's just constantly going on out there. Please just learn to ignore it. You'll benefit if you do. Okay, so we have a 1, 2, a minor degree off a low, followed by a 1, 2, a minute degree back test. This next bit here is up for debate. It's up for debate as to how we figure this out. Okay, I'm not exactly sure what it is. That's the simplest thing I can say. Here's one way of looking at it. Like we've gone 1, 2, 1, 2, 1, 2, and now we're in a 3. Which means we're going to get 3, 4, and 5. 3, 4, and 5, 3, 4, and 5 to come. So let me just explain. So 1, 2 at minor degree, 1, 2 at minuet degree, 1, 2 at minuet degree, 3, 4 at minuet degree, 3, 4 at minute degree, 3, 4 at minor degree. Okay, and end up with something, maybe something resembling something like that. Okay, so Tom's saying, oh, we're off to 5,300. Yeah, I think we probably are off to 5,000 and above. I think we're off to new highs. Like I said, I'm happy to be wrong, and if we swing low, I'll short it. But I'm just saying, I think that's where we're going. Okay, that's one way of looking at it. I'm not a big fan of this as a running flat. For minute wave 1, minute wave 2, 1, 2, 3, 1, 2, 3. It's just difficult to see that as an impulse. It looks like 3. So I put a running flat in place. I'm not quite sure how else I can subdivide it, to be absolutely honest. The alternative idea is that it's actually a triangle. Now that we've gone 1, 2. 1, 2, flat pattern into the 2, and then we've gone 1, 2, 3, 4, and we're working on 5 waves up into a minute wave 1. So in this count, it's still bullish, it's still a series of higher highs and higher lows, but we're actually a wave degree behind. So rather than going 1, 2, 1, 2, 1, 2, we're still in this, we're still in the second 1, 2, which was this one here on the other count. So in this count, we've gone 1, 2, 1, 2, then we're off into 3. It's actually way more bullish. I'm probably going to push for a lot higher as another 3. With a higher wave 2 position, we haven't completed the minute degree 2 yet. So likely to push much higher, I think. Well, not much higher, but significantly higher. So they're the 2 bullish counts. That's the best I've got for you in terms of explaining it. I'm not exactly sure which one's right, but while I see swing high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher, I'm going to assume and stick with it. I'm going to assume it's right and stick with it in the meantime, because we're trending higher, guys. So let's just roll. Let's just roll with it. Now, with the bearish count. Let's just remove these pieces of stuff. This was the bearish count. That we've had a huge move down. Okay, and we had WXY. Well, that's WXYZ. That's the primary. Let's just move that out of the way. Right, I need to change that, don't I? A, B, C. What was this? A, B, C down in the Z. So let me just shift that over because it's all gone a bit scrunched up. It's the same thing. I'm not changing anything. I just need to move things around a little bit. So this was assuming that we'd had 2 zigzags already, and we had got another zigzag on the way, and this was going to be in the same guise as the others. In other words, they'd gotten bigger over time. So the first zigzag was quite small to here. Okay, the next zigzag was much more significant to here, and the last zigzag was going to be huge to here. 1, 2, 3, getting more and more severe over time. Well, that can't be right now. Literally cannot be right, because this zigzag, this B wave, has gone back beyond where the A wave began, and that can't happen if we lead with 5, and we do appear to have led with 5. So if 5 isn't the start of something, 5 is the end of something, which supports the idea that this was a sustainable low. What we're going to do then is just delete it. It's no longer relevant. Save, delete, save. So now what we have to do is get a bearish alternative. Now for the moment, all I can suggest is that this is an independent complex structure of a larger complex structure. Not particularly imaginative, I know, but that's the best I'm going to have to give you, because we can't be a pure ABC, because it's 5 waves. There's not fucking 5 waves here. It's just end of story. Alright, so that's the it's a complex structure here. This is corrective X wave, and another zigzag of some sort down here. Now this zigzag could take the form of a simple zigzag. It could take the form of another complex zigzag. One zigzag, corrective structure. Another zigzag, corrective structure. Could be like this pile of mess. Okay. In an ideal world, right, we'd like to go 1, 2, 3, 4, 5, A, B, C. Okay. Now the only way we can do that, is to subdivide it as an expanding diagonal into an A. But we've got issues. We've got serious structural issues with that, in terms of making it look right isn't the problem. Measure right is the problem. So let me show you what I mean. That's the most ideal way of doing it. We get A, B, C into A into 1, A, B, C into 2, A, B, C into 3, A, B, C into 4, A, B, C into 5, and we've got a leading diagonal. Problem is, that is not 5. That's 3. Okay, and this is 3, as it should be, right? And I can't get it to subdivide as 1, 2, 3, 4, 5 because it overlaps. So leading diagonal or with a 5, or leading diagonal with a 3, I can't get the subdivision to work. So I'd rather just look at it as a zigzag. Zigzag, flat, zigzag, zigzag, zigzag. Now, it doesn't matter at the end of the day, because it's the same idea. A, B, C. But whatever we're saying is, if we've led with 3 here, rather than 5, we can make new highs and still be corrective. This is why I prefer to give it the benefit of a doubt off the low, because let's assume just for a minute that this is a potential B wave. This is A is 3, not A is 5. If this is A is 5, leading diagonal, 1, 2, 3, 4, 5, we cannot repeat, cannot make new highs. Simply cannot do it. Right? We will come in and then move lower in another 5 wave structure. If we are 3 as an A, right, we can get a 3B here. So we can go W, X, Y, X, Z if you want, or you can even go W, X, Y. Right, this is a much bigger secondary zigzag into A. 3 waves into A, double zigzag into A. This can take us B wave correction to new highs, and this can be a flat pattern. Bum, bum, bum. Now, even if you are bearish, and you've been bearish the whole time, well done. You've missed out on a 42% rally. So my point being, it doesn't matter whether it's bearish or not. We're off to new highs if that's the case, or it's WXY, and it will serve as a larger zigzag, double zigzag, complex structure. Which one is it? Haven't a fucking clue. I don't believe it's any of them, to be honest with you. I believe it's bullish, but they are what you're going to have to work with if you're bearish. Now I'll flesh it out for you. I'm not going to abandon it, of course I won't. I will flesh it out for you and come back to you in the future, and we'll have both of these ideas developed, because I think you should have a bullish alternate. I always a bearish alternate. I agree with that. I think we should. But there's the two options that I see. Okay, if it's going to be bearish, we could make new highs anyway. Right, we could get to 5,000 anyway. All right, so there's your bearish idea. And your bullish ideas. Another piece of geometry I'd like to point out is this inverted head and shoulders, which we've broken and back tested and moved on. That helps support the idea that we've also broken that downward trend. If we now have a look at some classical technical analysis for a minute. Right, we've got a golden cross 60 through the 250 on the daytime frame, the orange line through the green line. Now when this happens, green for the orange for the green, orange for the green, all the way back to here, orange for the green, and orange for the green here, and orange for the green coming out of the GFC, and orange for the green coming out of the tech bubble. You get the idea. Once you pass back into this positive shift to the upside, and you get orange through green, 60 through 250, we're into a new bullish phase. That supports the idea that we're into a new bullish phase. We've broken that series of downward lower highs. If we look at the ABV, right, we've come down in a strong downward trend of lower lows and lower highs, back tested that lower low, moved up to a new high, swung low, moved up to a higher high. Right, we haven't broken these highs back here. I'd like to see that. That would be nice. But we have now broken this swing high. So the sequence of lower lows and lower highs, again, here in the unbalanced volume, has now been broken as well. Lower low, lower high, 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 lower low, new high. Okay, also supports the idea that we're now into a bullish trend. Let's move that out of the way. Okay, so RSI is now reaching overbought conditions. The highest it's been since February this year. I think it's actually higher. It is, so actually technically the highest it's been since August, since this counter trend rally here. We're likely going to get a pullback sooner or later, aren't we? We're getting overbought, so we're going to probably have some kind of pullback in this upward trend. So some kind of sell-off is likely coming, but everything's still looking good. Monthly time frame. I want to come out to the monthly because I want to point out the... Okay, so I had a bear telling me that, oh, you can't ignore a monthly MACD cross to the downside. And I'm like, no, of course you can't. And then I pointed out to him that we've had a monthly MACD cross to the upside with a green candle on Instagram. And now apparently you get to ignore that because your own prejudice and your own bias about what's happening is more important. You see what I'm saying here, right? So bullish again, MACD cross on the monthly time frame, bearish phase over with. What happens when these bearish phases end, guys? Let's have a look. Tech bubble, green, MACD crossover, bullish phase. GFC, MACD crossover, bullish phase. Right? Whatever the fuck we're gonna call this thing, the rate bubble, whatever. The inflation bubble, the inflation correction, whatever you want to call it. Either way, MACD crossover, green, bullish phase. Right, it's all pointing towards us being in a new bull market. Now I'm just going with the evidence. It's fucking hell, if that candle gets much stronger, carries on for the... Can we keep that up for another 20 odd days? You know, it'd be a hell of a candle if we do. Either way, things looking good, right? Things looking bullish. So let's save that there. That's all I've really got to say about the classical analysis. Let's come over and have a look at the PCC. So we've mentioned on the PCC several times that we felt we had the extreme reading back in December. I know that we didn't get We got the low in October, right, which was this high back here. Where is it? This one here. Yeah, this high back here. But we had the what we believe was the extreme reading, which we got the candle intraday extreme of 2.123, line chart reading of 1.947 up here. Let's just show you the data. Okay, smoothing it out on the 60 to 250 exponential moving averages, we see the same move. And when we get the move of the 60 through the 250, we're trending higher. We've had the 60 through the 250 to the downside with the 250 rolling over, we're trending lower. Oh, now we will correct back up and come back down and correct back up and come back down, but I feel that we're on our way back to bullishness. Extreme complacency and bullishness will be the target for the next 24 months. Probably, maybe longer, maybe shorter, maybe longer. But I feel that we've had our extreme bearish moment. And I said that at the time when I marked this on the chart, that I felt that was likely the extreme moment of bearishness. Okay, we've now broken through that 250 and moving lower. This supports the idea that we are now entering, and like I said, it's not without retracements, it's not without further retracements, but we've now entered this phase, this phase, this phase, this phase, this phase. That's what I think we're now in. I now think we are in this phase. Okay, so that again points towards bullishness. Now let's come over and finish things up with the VIX before we move on here. We have a line on the chart going from 2017, a trend of rising volatility. People tend to associate that with bearishness, right? That we've got bearish pressure building up. One of these days we're going to pop. Right, we've broken that downward trend. We've broken that trend. We've actually broken the sequence of highs and lows now, of higher lows now. Okay, now we're not just going to go like that. Okay, we're going to do this again, and we're going to do this again, and we're going to do this again. All right, so we're going to be seeing spikes in the VIX. We're going to be seeing panic. We're going to be seeing worry. Might be getting one today with the CPI coming out, right? Okay, so. But once again, long-term bearish rising trend in volatility has been broken. Long-term move up in the PCC has been broken. Right? Long-term downward trend in the SPY has been broken to the upside. All of this screams bullish to me. Now, it won't be without pullback, so for God's sake, don't run away with the idea that Tom says we're off to the moon today, and there's never going to be a pullback ever again. Yes, there will be, and there'll be some pretty scary ones, and that'll be when the bears come out, ringing the fucking bear bell, going crazy again, telling you that it's this time it really is the end of the world, blah, blah, blah. You know, I'm sorry to be such a prick about it, but I'm just genuinely getting pissed off with the never-ending fucking doomsaying that's out there. It just gets on my tits, to be absolutely honest with you. And if you turn around, thumb your nose at me, and it all goes to hell, well, whoop-de-doo. Well done for egging on the end. I hope you're happy. Right, I'll be short anyway, so you can pat me on the back for making money as we go down. But why exactly you would like to get? Why exactly you want to choose that over just? Okay, right. So I'm going to go around in circles now if I'm not careful, because I'm ranting. So let's just stop. As the PCC, look like we're bullish. VIX looks like we're bullish. SPY looks like we're bullish. Yes, we're getting overbought, so we're no doubt going to pull back sometime soon, right? But it's more likely a buying opportunity than it is a selling one. Well, apart from the short term, swing low, swing high to a lower high, that's a shorting opportunity over the short term, but I've already mentioned that. Alright guys, thank you very much for joining me. I hope you got something out of this. And I will be back with you when I can, sometime in the future. Probably just covering the SPY, Bitcoin, the occasional mega cap, the occasional altcoin, as and when I can here on YouTube. Thank you very much for watching. If you're new to the channel and like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you fancy joining the Patreon, there's a link in the description box below. And if you're not following me to Twitter yet, there's a link in the description box below as well. Right, take care of yourselves, guys, and I'll be back with you as soon as I can. All the best. Bye bye.